Gold is like just trying to break through this kind of euphoric little peak that we had back over here, about $5,100, $5,200 per ounce. So if we were to just forecast that forward here, you can see we've got a pretty nice move to $5,100 and about $75 percentage wise from where gold is right now. It's about 18.5% to the upside. So it's really exciting. This is a very strong chart pattern. All these patterns is made over the last little while. It rallies, it has a pause, it rallies. It's just a series of these bull flags and pauses. And we're having another pause right now. And we had a beautiful play with this breakout and this move. A whole lot of physical metals for longer term, but there might be another breakout trade here for about another 15% rally or so in gold, just as a short-term trade, just to pull more money out of the market, take advantage of this, and put a little more capital to work in this space. So, and I think gold could be back where it is now, could actually be $1,000 lower than it is right now, looking forward 12 months. I think there's going to be that kind of volatility. But after that, I do think we're going to about 7,500, 7,400 in gold. That'll be the next upside target.
Renowned technical analyst Chris Vermeulen sees gold setting up for another powerful breakout as bullish momentum continues to build. Gold is currently attempting to break above a previous euphoric peak, and chart projections suggest a move toward $5,100, $5,200 per ounce. That represents an upside of roughly 18.5%, making it an attractive short-term trading opportunity. Technically, gold has been forming a consistent pattern of rallies followed by pauses, classic bull flags, which often signal trend continuation rather than exhaustion. Zooming out, this repeating structure reinforces the strength of the long-term uptrend. While volatility remains a key risk, and gold could temporarily drop as much as $1,000 over the next 12 months, Vermeulen believes such pullbacks would be part of a larger bullish cycle. Beyond near-term moves, the longer-term projection points to 7,400, 7,500 gold, supporting both active trading strategies and long-term physical metals investment. Now, we present the clips from Chris Vermeulen's interview. Before we continue, please subscribe to our channel and activate the bell icon to receive timely updates.
Gold has had a massive move for the last several years to the upside. And now people all of a sudden, want to get into gold now. I mean, it's great for a trade, but as a long-term investor, I think you're gonna have to weather a storm. I think we're gonna see some pretty big volatility over the next year or so in the markets. And I think gold could be back where it is now, could actually be $1,000 lower than it is right now, looking forward 12 months. I think there's going to be that kind of volatility. But after that, I do think we're going to about 7,500, 7,400 in gold. That'll be the next upside target. But that means we have to go through a big rally and then a correction of some sort. And then, of course, it's going to go higher. So here I have a monthly chart of gold, and we have the first super cycle here, or one super cycle here, where gold went into a multi-year pause and everything took off during the blue box over here in early 2000s. Everybody moved into real estate and stocks. And then gold shot higher and took off. Now it looks dwarfed because we've got these high targets, but gold pulled back 34%. It sold off with the equities market and with the economy. And then we went into a multi-year rally. And so when we fast forward to the new super cycle that started in 2019, we saw gold move sideways for several years. Everybody moved into stocks and real estate. Now gold has become that shining warning sign that, hey, it's money's flowing here. I do think gold is going to push up to around 51, 5,200. And then I think we're going to see the music stop. I think we're going to see difficult economic data come out. We're going to see the stock market sell off. I think we'll see gold pull back very similar. I think we could see it pull back 25, 35%, which brings it back to around $3,400 an ounce. And then from there, I think we'll see the next target after that will be somewhere around $7,500 per ounce. That's the first target, but it could go a whole lot higher after that target, obviously. But I think we're coming into a similar price action as 2007, 2008. We're seeing money and sentiment moving into all of the assets in the precious metal space in a similar way. Now, it's different data and different news, but price always does the same thing. It goes up or it goes down. They're either people are greedy and they want to make money, or they're scared and they're selling. And so it doesn't matter if there's what the Fed's doing, if central banks are buying something, price is still going to just move up and down based around that move. And a really good example of that is if we take a look at this year, Daryl, the 2025 tariff sell-off, and this is the QQQ. The market sold off, and we avoided the crash, and then it started to bounce, and then it actually turned into a rally, and we played the upside. Well, that was a tariff-driven move, very different. We haven't had anything really like that before. Well, take a look at these two charts. The top one is the tariff one we just went through. The bottom one is COVID 2020. Very, very similar price action. The stock market does the same thing. It goes up with greed. It goes down with fear. Every time it does it is for a different reason. It's a different economic environment, but price doesn't know the difference. All it knows is people want to buy me, I'm going up. People are selling me, I'm going down. And that's what I focus on. So all the analysis I'm giving you is based on technical analysis for precious metals and cycles, historically, how things have moved, what the charts are saying now. And I take out all of the noise between central banks and conspiracies and manipulation because there's nothing you can do about any of that.
Gold has delivered a massive multi-year rally, but technical analyst Chris Vermeulen cautions that investors chasing prices now must be prepared for sharp volatility ahead. Gold could first push toward $5,100, $5,200 per ounce, followed by a significant correction of 25–35%, potentially pulling prices back near $3,400. This type of move would mirror historical gold supercycles, particularly the 2007–2008 period. Vermeulen emphasizes that price action is driven by fear and greed, not headlines. After a corrective phase, gold's longer-term trajectory remains bullish, with a major upside target around $7,500 per ounce and possibly higher beyond that level. Let's get back to the interview.
Silver's on fire today as you and I are speaking, which is December 17th. It's up almost 5%. Big move. Silver has already broken out of this pause right here. Gold is kind of stuck trying to break out, but silver's already extended. It's already moved to the upside. It's breaking out again. Our target on here was about 68 and change, which we're probably going to hit that in the next day or two. And then we can recalibrate what happens from that level. But overall, silver's on fire. And this is one of those other signs that's telling us we're a little bit later in the mature rally phase in precious metals. Is gold has moved up very nicely for many years. Now everyone is piling into miners, silver, platinum, and palladium. When we see the volumes pick up in all of those, and pretty much any stock that has the word mining in it, could be copper miners, could be base metal miners, This is usually what happens near the later edge. People later stages of a rally, they say, okay, forget the boring thing that's worked really well in the past, gold. Now I want to move into silver. I want to move into miners, things that move faster, and that's what we're seeing. And so that's why we're seeing silver break out. It's a tiny market. There's a bunch of people wanting to get in and take advantage of it, and they're all moving to the fastest moving metal or stock, and that's that's why silver is leading, I think, right now. And it's a good thing. I think silver's still going to rally. I think it could rally to 71, 72, maybe even into the $80 mark as it peaks out, probably with gold at roughly the same time. Wherever silver tops out, we could grab a couple levels. So depending on how we want to go, if we take this kind of low right across this level here, and wherever silver peaks out, say it peaks out at 68, somewhere in here. Well, I think it's going to go to around 72. I think that's kind of where it could blow up and kind of shoot higher to maybe into the 80s. But let's just say 72. There's a natural pullback level around the 38% retracement to a 50% retracement. So we could see silver pull back to $50 or $43 an ounce. It obviously would be a substantial pullback. If we take a look percentage-wise, that could be, a 30, 40% pullback. And that's pretty normal for a move. I mean, a 38% retracement is very conservative. It's actually a very bullish pullback. If you pull back to that level and then it starts to build a base and starts to move higher, that is a very strong symbol. If it moves to 50% pullback, it usually is going to struggle a little bit, take a lot longer to get back up to all-time highs. And if it pulls all the way down to the 618, a lot of damage is done, because based on the Fibonacci theory, if you come down to the 618, the first measured move target ends up being right at the previous high. So you end up putting in a bit of a double top. So I do think once, we've broken through that $50 mark, now we're going to see silver have a blow off top wherever it tops, in the 70s, in the 80s over the next month or two. But then I think it's going to be stuck probably above the $50 mark. We've been stuck under the $50 mark forever. When we go back and look at historical price action, you can see here we've been, let's rescale this. We've come up to that 50 mark, close to the 50 mark a couple times. It's sold back. I think now we're going to be stuck above the 50 mark, above these previous highs, or above like the 44 level. So I think silver's hitting a new pocket of price to stay in and hold up.
Chris Vermeulen says the breakout signals a late-stage but powerful move in the precious metal cycle. As of December 17th, silver jumped nearly 5%, decisively breaking out while gold lags. Vermeulen notes silver's small market size makes it prone to explosive upside, with targets near $68, then $72, and potential blow-off moves into the $70–$80 range. However, volatility is inevitable. After peaking, silver could see a 30–40% pullback, possibly retracing to $50 or $43. Still, holding above the $50 level would confirm a new long-term price zone, reinforcing silver's bullish structural shift despite sharp corrections. Share your thoughts on his analysis in the comments section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos.